SOFI Technologies has skyrocketed over 170% in just 4 months and is now trading at $16. With this impressive rally, can SOFI continue its upward momentum? Or is it due for a correction? Stick around to find out. Over the past 5 years, SOFI has shown strong financial growth with high double-digit revenue growth and a shift to profitability in 2024. It's also important to note that negative net income is common among software companies due to factors like stock-based compensations, high investments in R&D, and aggressive scaling efforts. However, SOFI's high beta of 2.2 indicates it's a volatile stock, which means it tends to experience larger price swings compared to the broader market. Shifting focus to SOFI's Q3 outlook, the company exceeded expectations with a strong 30% revenue growth. Key segment highlights include financial services revenue soared by 102%, new member additions up by 35%, bringing the total to 9.4 million. SOFI also added over 1 million new products, increasing the total to 13.7 million, and saw a 52% increase in revenue per product, reflecting solid growth in customer engagement. However, SOFI faces challenges including ongoing losses in its credit card business due to a longer payback period, and its tech platform segment has yet to land major deals with large financial institutions. Despite these hurdles, SOFI's profitability milestone and impressive growth in key areas make it a compelling player in the fintech sector. Moving on to valuation, SOFI's P/E ratio stands at 137, which is extremely high compared to the fintech sector average. A high P/E ratio often reflects optimism about future earnings. But if SOFI's growth slows or falls short of expectations, the stock could face significant price corrections. Investors should be cautious and consider the risks associated with such a premium valuation. Turning to the technicals, SOFI's price is currently well above its 20-day SMA, signaling a strong bullish momentum. Looking at the past 2 candles, we see an indecision doji candle followed by a green marubozu candle, which suggests potential for a bullish move. However, it's important to wait for confirmation before jumping in. If the stock price moves sideways, it could indicate consolidation, so patience is key. On the other hand, if we see another green marubozu or a gap up candle, it will confirm that the bullish trend is likely to continue. But if the next candle turns out to be a red marubozu or we see a gap down, it could signal a reversal and you might want to consider selling your position. So always wait for clear confirmation before making any moves, as the market can be unpredictable. Given the limited historical data, Fibonacci retracement tool suggests key support levels at $14.30, $12.90, and $12. If the stock fails to hold above these support levels, we may see a deeper pullback. On the upside, breaking the $16.50 mark could lead to a significant upside potential. Alright, time for the verdict. Buy or sell? Given the analysis, I'm recommending a hold rating. However, for short-term traders looking to capitalize on momentum, it could still be a solid play for some quick profits. Remember, this is not financial advice, just my personal opinion on the stock. If you have found this video helpful, be sure to give it a thumbs up, leave a comment below, and subscribe for more insightful content. Thanks for watching and see you in the next video.